Income Tax 2020, Practice Problem 1, Presentation 13, Adjustments to Income, IRA or Individual Retirement Account Deduction, Tax Formula in Excel. Come in, relax with Income Tax 2020. Here we are in the Lacerte tax software. You don't need the Lacerte tax software to follow along, but I do think they have a free 30-day trial. So if you can get access to a promo or demo version of this or any other tax software, it could be a good tool to practice with. We're going to be continuing on with our comprehensive practice problem number 1. In previous presentations, we entered our income information, getting down to basically line 9 here. Now we're working on the above the line deductions, this time looking at the IRA contribution. So in the prior presentation, we entered that into the tax software here, and now we're going to enter it and continue on entering it into our tax formula so that we can visualize it most easily in the tax formula, see what the impact will be on the income tax formula, and also double check the work as we enter it into 2 separate locations for the data input process, 1 into the tax return, 2 into the Excel worksheet. So last time we took the IRA deduction, just to kind of recap what we did here. We put it on the Schedule 1, and then we increased the IRA deduction down here for our married taxpayers, maxing out the IRA contribution. Now just remember, when you enter this into the Excel worksheet, it's one of those things that you may not know. Oftentimes you don't know what the IRA contribution is going to be because it might be the last thing that you recommend. So once again, in other words, it's possible that your questions with relation to the retirement plan will be, do they have access to like a retirement plan through work, such as a 401k plan or a 403b plan? And if so, are they contributing to that? And that's going to be the first recommendation typically, is to contribute to that in the future. But they can't typically contribute more to a retirement plan with work, such as a 401k plan, at the point in time you do the tax returns, because the tax year has passed, it being 2020, tax returns being prepared in 2021. But if they're able to put money into an IRA, then you might still be able to recommend that they do so, because you have up until typically the filing date of April 15th, not including then the extensions. So oftentimes what will happen is you'll go through the entire tax return and you will rely to some degree on the tax software to see whether or not they qualify for an IRA, and that'll be your last kind of recommendation as you go. However, if you're dealing with clients that they knew they would qualify to put money into an IRA and they did so, then they'll provide you that information, hopefully, and if they don't, you're going to ask them about it. And the information will not be like a W-2 or a 1099 or anything like that. We don't have the formal documentation. They're just going to simply have to tell us that they put money into the IRA. So if they did tell us, then it would be straightforward on our side as well. We can then go over here on our tax formula, and possibly they put it in the notes or in our organizer that they put money into the IRA. And then that would be an above the line deduction. So that would be up here. So then we can simply go into our adjustments, and we're going to say they put money into an IRA. They put $12,000 into the IRA, $600 for each spouse in this case, and that brings our adjustments to the $14,150, and that then will pull forward in terms of our tax equation to the first page of the $14,150 above the line deduction, or adjustments to income. Income minus the adjustments to income, giving us the AGI, or adjusted gross income, $66,880. That then should tie out to what we have on a tax return, so we can kind of double check this. So we have then the total income, the $81,30, and then the $14,150 for the $66,880. The $66,880 right there. $24,800 standard deduction for married couple filing joint. That gives us the taxable income of the $42,080. The $42,080 being the bottom line. That matches out on our tax return. Then we're then going to go to page 2, relying on the tax software to help us out with the calculation for the progressive tax, that being $4,498. I'm actually going to plug that into our formula here. $4,498 was it, I believe. And then we have the $8,000 that's coming from the W-2s that we withheld prior. So now our refund is currently at the $3,502, which we can check to the software. We're at the $3,502. Looks good.